see. Is this live? I think it is live. I think we are live right now. Give me just a moment to share to Twitter that I am live. All right, now. All right, now, so the purpose of today's live stream, welcome to everybody who is coming, is to go through my short list of new ideas and to see what I want to write about and what I want to add to my model portfolio. And hey, somebody's already in the chat asking me about Sasol and LyondellBasell. Yeah, we can talk about chemicals, absolutely. So Sasol is the South African chemical company. Let's go to candlesticks, take off that, take this to RSI. Wow, it's really bounced back well compared to a lot of chemical companies off the bottom. And then look at some of the is it 1S or 2? Let's see. Okay. Some of the South African stocks, they don't have a lot of good data outstanding. Yeah, it looks like I'm not going to get good. Oh, well, there's data here on macro trends. So you have falling revenue in dollar terms for the last couple of years, which makes sense. EBITDA is positive. Net income is even positive for the 2025 calendar year. Not bad. And then on metrics, my past take on Sasol was that, oh, I like that price to sales metric and the price to book. I have such a large position in my portfolio in Sibanye-Stillwater that I don't want that much South Africa risk, because South Africa is a basket case. As far as chemical companies go, you know, if you don't have a huge look at that forward PE, that's amazing. I haven't dug in too much. This is perfectly fine, although I would look at sometimes that South Africa risk might just stay for a while. PE ratio, so this is, wow, well, maybe I just better look at the chart. If the share count hasn't exploded, wow, that is a cheap company. Used to be over $50 a share. I don't know if they've had any dilution between here and then, because my favorite tool for that is macro trends, and it doesn't have the data on the share count today. So some foreign ADRs just doesn't have good data in the system. Yeah, Sasol is a perfectly tolerable company. I'm not against it. It's very decent. I just don't want that much South Africa risk in my portfolio. So Sibanye-Stillwater has taken my full South Africa allocation. The other chemical company that's Brazilian focused is Braskem, and that is almost 10 times cheaper on a price to sales metric, but they have some balance sheet problems. You know, over $10 billion of debt on that much revenue. Which cash per share? $8 of cash per share. What's the burn rate on that cash per share? Back Braskem. It was Braskem, not in macro trends. Yeah, some of these foreign ADRs don't come up very well in macro trends. So I guess I could look at their data here in FinViz, but it's not my favorite platform for that. So balance sheet, annual, Their current assets, cash, quarterly. Yeah, so their cash is down to 1.3 billion. Short-term receivables, inventories, current assets. They're going through, 300 to 600 million of current assets a quarter. That's not great. Total liabilities, long-term debt is, well, long-term debt is at least not rising. There's total liabilities. Are they paying some down? It's not terrible. I'd have to dig into the balance sheet further, but at some point, this isn't all cushion. You have a need for working capital. So I don't know how many quarters of cash burn they have left, and I'm not going to bet on a Brazilian chemical turnaround, say within 6 months. I want a company that has, if I go back to annual, I think I wrote about them when they had 4 billion of cash in short-term investments. And, I like them a lot better when they have 3 years of cushion instead of 6 months of cushion. But I wrote about them 2 years ago. And some people fought me in the comments on Twitter on this and said, oh no, they really have much more cushion than that. But I'd have to dig into the weeds and find out. So if you want to dig into the weeds on Braskem and look at the balance sheet, if they survive, just to get to the same price to sales ratio as Sasol, has to go 10x from here. So, it's one of those tails you lose, heads it's a 10-bagger. But I'd have to dig into the weeds and find out if they are going to survive. So that's my take on the big chemicals. They also ask about LyondellBasell. Can look at them. So I prefer ASICs, Advanced 6 over LyondellBasell. Whoop, are they? Come on. My pop-up blocker. No, macro trends. There's always this fight between the free websites I use and my pop-up blocker. Let's see, there we go. And then every few weeks my pop-up blocker beats them. So right now I guess I don't have access to macro trends. Oh well, too bad. So LyondellBasell has a covenant in their system that if their their net debt to EBITDA, if it falls below a certain range, it bounced pretty hard last week. Let me see their last earnings. I need to see the EBITDA from their last earnings. So, last earnings. So we had revenue beat and earnings per share beat. That's a good sign. But what we really need is the EBITDA, because they were on track to breach a covenant if their EBITDA didn't rebound. So if I go to, income statement, quarterly EBITDA 821. So yeah, I had written on Twitter, so last was 458 662. To not breach their debt covenant, Q3 had to be 800 million of EBITDA, and Q4 has to be 1 billion of EBITDA, because they were coming out of this sequentially improving EBITDA as they cut capex. And so yeah, Q3 they're on track to not breach their dividend covenant. And so Q4, if this number is $1 billion, then they don't cut dividends. And this shouldn't be, what is the dividend yield now? 11%. At the very minimum, once they're out of the woods, that dividend yield would fall to what, 6-7%. So that's almost the double from here, just on the dividend yield, on this company being a stable, huge dividend payer. So right now, this is all fear of a dividend cut. But Q3. Once you get past Q4, so even if EBITDA stabilized at something like 800 million, you need a full year for this 458 number to roll off. Once that's rolled off, their trailing 12 months EBITDA is going to look so much better. So yeah, one more quarter to go of danger. And then if this next quarter, Q4, is $1 billion of EBITDA, then they're out of the woods, then they're good. Which would be fantastic. So yeah, LyondellBasell their dividend might not be so dangerous. Let's see. JH3496 says, hey, DGen, what do I think about Hydrate and ABL from my previous picks there? Yeah, ABL is still my #1 pick. I have my paywalled video every week. I've been pounding the table on ABL. It's my #1 pick. Hydrate. I haven't looked at Hydrate for a bit, and FinViz doesn't show that. I have to use Yahoo Finance. I wrote about Hydrate Technologies. They just had a terrible earnings call, or the market perceived it as a terrible earnings call. The stock fell 25%. I haven't dug in to see. Yeah, it's actually on Friday. Very timely. Go out to 1 year. I think it might be an overreaction. I'd have to get into the weeds on the earnings call. The returns aren't growing. Perfect scripts. So 3 days ago, 132% year-over-year revenue increase. Broad growth. So I'd have to dig into the earnings call on Hydrate Technologies. I don't know why the market when I get to about a 10 billion market cap, I can't tell anymore if the CEO is lying to me. Sometimes I have a chance. If it's a smaller company, I can tell if the CEO is lying. $10 billion company, they're just too polished. You can't catch them. Get into the micro cap space, they could just put their foot in their mouths and they could just make a mistake and tank the stock price. And I had read about this Hydrate Technology earnings call, and I think the CEO just put his foot in his mouth. I think that's the only thing. I mean, you're growing at 132% year-over-year revenue, and what is the current revenue? Financials, it might not have updated here yet. Quarterly 12/31. Let's see. Yeah, so because it only came out Friday, the Yahoo Finance doesn't have the most recent revenue. But you're calling it 18 million trailing 12-month revenue, but up a little bit more from that. And then what's the market cap now? Yeah, I mean, trading at 8 times sales is pretty rich, but it's when a company is growing faster than, call it 40%, nobody really knows what discount rate to use. And it looks like, go back to quarterly. Are they GAAP net income break even? Let's see, yeah. Net income, no. What's the shares outstanding? Some of the microcap data is not good enough, but what's their EBITDA? This is in thousands, so about $1 million of EBITDA over the last trailing 12 months, not including last quarter. And what's their balance sheet? So they've got, it's all current liabilities, it's all account payables and deferred liabilities. So total assets, cash, and accounts payable. They don't have long-term debt. So what's their interest expense look like? Interest expense. They have interest income from their cash pile, no interest expense. So yeah, it's not in a dangerous spot. They can just grow and take their market. I would buy that dip. I do like Hydrate Technologies. I might add that to my list of things I need to do an earnings update refresh. So earnings update refresh for Hydrate Technology. I'd written about them a while ago, and I still like it. That is a huge dip, and I'd have to listen to the earnings call, but I think what happened is they, when you get to a company growing that fast, the multiples just get crazy. So whether it's a $5 stock or a $3.50 stock, it's probably oversold. It's probably overdone. Now, let me get back to, sorry, the chat's coming in so fast. Did I look into NLCP? What is NLCP? Is it on FinViz or is this a foreign thing? NLCP. Hope it's not a typo. Let me go to Yahoo Finance. Is that a foreign ticker? If it's a foreign ticker, you got to give me the New Lake Capital Partners. Is it? It's Pink Sheets. OQX. It's a Pink Sheets. I think I had looked at them. What is their summary? I'm going to write this one down. NLCP, New Lake Capital Partners. Is this the Australian one? NLCP, the Australian roll-up where they let the people they acquire keep 50%. No, New Haven, Connecticut. What is New Lake? A REIT. Ah, the cannabis REIT. Okay. Somebody did tell me about New Lake Capital Partners and their, let's see, an asset they recently acquired at a huge discount. So I'd have to dig into this one more. I'd really just be looking at the chart. I haven't written about any cannabis stocks yet, and I don't know. I mean, myself personally, there's so much torque out there in boring businesses. I don't have to get into the wild, crazy stuff and the political risk of it all. And so gambling and marijuana, I kind of see it in the same category where I lean very libertarian. But there are some concerns about what some of this stuff does to society at large. That's a huge dividend yield. Market cap. Let's see. Trailing PE, forward PE, price to sales, price to book. It's the numbers don't look bad. I haven't written about any cannabis stocks, and I've stayed away mostly from gambling stocks. I don't know if I will, but the valuation looks decent, and I was looking for more REITs. Let's see. Let me go back to chat. Let's see. And then so this is Sam's Dragon portfolio. Koifin is a good free source for detailed stock info. No affiliation. Yeah, I really like macro trends, and it used to be free, or at least my pop-up blocker used to be good enough so that I never noticed that it wasn't free. Let me see if it is working now. Lyondell Basel. It's 2 L's and 2 L's. Yep. Is it working or not working? Yeah, so they wanted me to pay now. Sorry, Macro Trends. You're my favorite free website. What do I think of B. Riley now amidst CEO controversy to play rate cuts? So I haven't talked about Riley in a while. I really liked Riley for so many reasons, and I still like Riley. It had been in this channel between 5 and 7 since July. It had been trading in a nice tight channel, which just recently broke down. Now it's below the 200-day moving average. So I have a write-up about the drama and the short report and everything going on, but it was tied up with franchise brands, and they blew a $1 billion hole in their balance sheet, but probably pretty overblown. Let me see. Area of expertise. Somewhere on here there's a page for the deals they're doing. There's so much I like about this company. Give me a moment to find this. Advisory services, investment banking. Somewhere on here there's a list of deals they've done recently. Capital markets. And I never find it. Transactions, there we go. So you can kind of see about how busy they've been, and they have been busy. Oh my God, business is booming at B. Riley. Holy crap, these guys are going nose to the grindstone. When they're a sole placement agent, so when they're a joint agent, you never really know how much what percentage is them, but when they're a sole placement agent, you know. So what's the margins there for the underwriter? Is that 3 to 5%? So you know, like bam, there's $30-50 million, something like that. They have and every single one of these deals, you have September, October, November. How many deals do we have just September, October, November this year? Oh my God, look at September. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29. So 29 things between September and November. That's a lot of stuff. Now, if I go back in time to last year, you're not going to find 29 things from September to November because things are speeding up as interest rates are getting cut. So last year, that was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23. So from 23 deals to 29 deals, Riley's capital markets business is accelerating. That's their core business. And the small cap underwriting space is not heavily fought over. The large players don't want to do it. It's Oppenheimer and B. Riley has the ability to do a lot of business there. They just have this sort of fog over them, and also the capital constraints. Kind of Howard Marks at Oaktree kind of came in and bailed them out when they were at their weakest, and he bought out 50-something% of their liquidations business at a very good price. With rate cuts and increasing transactions, it's looking more and more like they're going to survive. And if Riley is going to survive, what is Riley worth if it survives? A lot more than what it's trading at. I think I did a sum of the parts here, and it was it's worth a lot more than it's trading at if it survives. What is it at? 132 million market cap. If I look at, well, just for comparable metrics, what's Oppenheimer? I mean, they don't have the assets under management. They were trying to grow out their financial advisory business, but the reputational damage from the short report and for being over leveraged, that they had to sell their financial advisory business kind of at distressed prices. But what is just the multiples on revenue? What's price to sales for something like Oppenheimer? They're not going to have huge multiples like Morgan Stanley, but somebody small or smaller. Things are not loading. I'm having some trouble on my internet connection right now. What is Oppenheimer? OPY. They're trading at a price to sales of 0.46, so their sales are about double. Enterprise value of $2 billion. Here are their enterprise. So I mean, they have a lot of debt. One of the problems is a lot of debt, but they've been chipping away at that debt, and now Riley's still a 10% owner of Babcock and Wilcox. So that's, with the $1.5 billion backlog increase that Babcock and Wilcox just had, their 10% ownership stake in this is now worth about $70 million. When this price goes to about $10 or higher, that's another $100 million of debt that they can wipe out by selling that. So price to sales of, to get to equal levels as Oppenheimer, it's a triple just to get to the same price to sales multiple. I think it will eventually, if you look at the earnings capability, I mean, this is a company that paid, I think, $12 in dividends in 2 years. And also it's a bigger business now because they did blow $1 billion hole in their balance sheet with some debt, but they also bought a bunch of stuff. Let me look at, what did they pay in dividends? Where can I see that here? Will I see dividends on this? No. I think the dividend information might be easiest to find, even though I hate it, on Yahoo. So let me look at Riley. I mean, their earnings potential is just so enormous, and they haven't diluted because the management is such large owners. So in all this mess, they haven't diluted, which is fantastic. And I don't think they plan to dilute because they're not going to want to dilute themselves. So yeah, if you look at 2021, just in the year 2021, they paid $6.50, $8.50, $12.50 in dividends in 2021. Remember, 2021 was that peak stupid boom year of zero interest rate policy. This company can easily earn in net income $12 in a year. So, you know, the next boom year that comes, and that's probably coming, maybe that's 2027 when we have low interest rates and the market's going absolutely crazy. Yeah, I think they'll earn $10, $12, $15 in net income in 1 year in 2027, at which case it can't be a $4 stock through all that. And, you know, if they've survived this far, they're probably still going to survive. As far as the short report and are they going to get taken out, you know, is Bryant Riley going to be dragged away in handcuffs? Probably not. If you look at deals they've structured in the past, they're usually very good at protecting themselves. So I haven't written about Riley in a while because if you look back at the chart, I wrote about Riley when it was, I don't know, $40 a share. And it's got smacked down to I don't know, $1 a share. And they did blow $1 billion hole in their balance sheet, but they've been very proactive about digging their way out. So they've been doing this amazing thing with their bond holders, negotiating with their bond holders. For example, the bond holders who obviously bought it at a discount on the open market, they accepted a haircut in face value, a date farther out, and a higher interest rate. But because of the haircut in face value, B. Riley was getting lower interest payments, more time, and then the debt holders were given a handful of warrants. And so they shaved a few $100 million off of their debt burden by that restructuring. And what's so nice about the warrants is that when the warrants, you know, reach their maturity date, that's more cash into the company. So it is dilution, but it's dilution. I think all the warrants were at $10 a share. So the bondholders who bought the debt in the open market were willing to sign up for that, and it was a good deal. There's a huge advantage of having a company that's smart about their capital markets transactions, because they can, you know, I was in an oil refining company and they were so stupid about it, they just walked into bankruptcy. I mean, they had a year to do something and they just walked into bankruptcy because they didn't understand capital markets. So it's nice for a company that knows capital markets well enough to help themselves. Anyway, that's my spiel on B. Riley. Yeah, I mean, they could earn easily $12 a share in 2027 if it's a booming year like 2021. What do you think about Trinseo as a chemical equity stub? I do not know about Trinseo. That is a new name for me. What's Trinseo? TSE Trinseo PLC. What is Trinseo? I might have to look at this. TSE. Is it on a large exchange? Yeah, it's on the New York Stock Exchange. What's going on with Trinseo? It looks like a chemical stock. That price chart looks like a chemical company. 35 million market cap, 3 billion in revenue, price to sales 0.01. Somebody thinks this company is going bankrupt. Maybe they are. I don't know. But this is priced for bankruptcy. I know that it's priced for bankruptcy. Where's their... So their income statement annually, 3.6 billion, 3.5 billion, 3.1 billion, EBITDA. EBITDA is positive. Net income negative. Where's their interest expense? Do they cover the interest expense? Oh yeah. So EBITDA less than interest expense is not great. Even in 2023, EBITDA was less than interest expense. So that's a death spiral. How long? FinViz is not nice about giving me all the data. I don't know how long they've been in a death spiral, but they are in a death spiral. I don't know if interest rates will be cut enough to save them. And there might be a special situation going on that I don't know about. But just at first glance, that is a pretty toxic death spiral. Trinseo death spiral chemical company. Is going to be hard to get their way out of that one, and they're priced for bankruptcy. Unless there's something special already going on. And maybe there is something special already going on, but I don't know about it. They have to change accounting for orders per month to orders delivered miscommunicated. They're GAAP positive. When you check out Hydrate, please check out VST also. So what is VST? Vistra Corp. Okay, somebody had mentioned Vistra Corp to me earlier. VST is Vistra Corp. What is that? A $60 billion now, and in valuation. So this isn't normally my favorite swimming pool. There might be something interesting about them that I don't know about. You know, they might have some huge data center benefit coming to them. Gas-fueled dispatchable power in the Permian Basin. Yeah, I feel like I'm probably late to this story because people have been talking about, you know, data center power in the Permian Basin. I don't know how much value is left for me here being this late to the party. It's not my usual swimming pool. Babcock and Wilcox was my, that was my data center electricity idea. And I wrote about them when they were $1 a share. Oh wow, that's already the 1 year. So I wrote about them, now April they were 20 cents a share, but I wrote about them when they were like $1 or something a share back here. And they've gone to $6. So that was my personal data center build out electricity position. Vistra is not really my speed. I'm gonna avoid that one. Let's see. New Lake Capital Partners, MJ REIT. MJ means marijuana REIT. Okay, I'm a little behind on the. Please look at Entravision. What is Entravision? Entravision Communications. Advertising agencies. Market cap, sales, price to sales, GAAP net income. That had a huge spike, and looks like there probably was associated with an earnings call, but the summary is not here. What do they do, and what are their financials like? Okay, income statement quarterly. It looks like that previous quarter, no, maybe it is updated here. So nice 20% revenue jump. Gross profit came with it. EBITDA. So net income was still negative, but there might be something in the operating cash flow side of that. Market capitalization. What do they do? No, I don't want to advertise it. What are you guys? What is Entravision? An advertising company. Okay, I get that. Okay, Univision. You want to advertise on Univision. Spanish language radio, Hispanic markets. So is Univision and associated radio stations, is that worth? My internet connection's a little laggy today. Is Univision worth $250 million? I don't know. I'll write it down on my short list. They have the risk of competition with, you know, the internet and online channels. EVC, Entravision. That's Hispanic television and radio. I live in Tampa, and Tampa has a huge Hispanic community. And the Hispanic community of Tampa, it reminds me of being in the 1980s again. I mean, the husbands all work blue-collar jobs. They smoke cigarettes. You know, the wives stay at home. It's kind of a blast of the past. And yeah, they do listen to radio and they do watch television. But I have a suspicion that their kids going to elementary school, coming out with perfect English, they're all going to be on tablets. So I don't really know how much future there is in Spanish television. Because their kids come out of elementary school, they speak English, they want to be involved in English culture. I don't know how many generations you have left of Univision advertising, how strong that will be. Let's see, please check out Centrotherm International AG for AI and EV exposure. Centrotherm. I'm not making any progress on my own list. I'm looking at you guys' list. That's fine. That's fine. I'm happy to do that on the live stream. Centrotherm. Centrotherm International AG. So this is a German company. What's their primary ticker? So this is in euros. Nope, not giving me a lot of information here. Still not a lot of information. Yahoo Finance is funny when you don't give them the right stock exchange. It has really bad information about the company. Munich, if it's a German company, maybe this is their main one. No market cap data? Come on. What is this? Berlin? I can't even get a market cap here on Yahoo Finance. DUS. Yeah. Centrotherm. No, let me check out. Where is this? See if bar chart has better data. Or Koifin. Centrotherm. No Centrotherm on. No Centrotherm on that. So I'll check out Koifin then. Is this a membership thing, or can I just use it for free? Loading. I must have awful internet today. I'll put Centrotherm on my list to look at later. So that is German AI EV question mark. Okay, Koifin is not doing anything for me. Let's see. Oh. No, sign up for free. Okay, it wants me to make an account. It's not being friendly that way. All right, let me look at. There's a link to a blog about Entravision. Stream very choppy. Yeah, my internet, thank you, Spectrum, is not very good. What are the chances Riley survives paying down debt and refinancing? I mean, they've already paid down, I don't know, $400 million of debt. Things like they own the leading laptop case brand that they bought for, I don't know, $500 million. If they can flip that when the market is hot and even get what they paid out of it, there goes $500 million of debt. They have a lot of levers they can pull. How long do you think WTI crude oil might go? Commodities are tough, but so if you look at, let me go back to 5 years. If you think about the commodity super cycle, and I went back 140 years to see, okay, what order do things move in? Is it gold and then copper and then oil? It's not always in that order. Sometimes oil is first, sometimes copper is first. I think this cycle it will be gold and then copper and then oil. And the reason why is because gold is such a niche, small mining. Like if gold mining doubled, the amount of diesel that it used up wouldn't really move the needle. But the base metals, if you're in an industrial boom, base metal mining, if that has a pickup, that does use enough diesel to move the needle. So I think crude oil might still be a 2027 story, and copper might be the 2026 story. That's kind of my best guess, is copper and nickel and platinum for 2026, and maybe also aluminum and iron. I just don't have any small caps I like in aluminum and iron. And then oil for 2027. I'm seeing more and more huge SUVs again. And if you remember in the early 2000s, there was a time when the oil price was low, and the oil price was low for a few years, and people bought these enormous SUVs. There was the Ford Explorer, then there was the Ford Expedition, and then there was the Ford Excursion. And I'm starting to see SUVs as big again that remind me of these old Ford Excursions. And I think what happens is if the oil price stays low enough long enough, people are going to buy stupid sized SUVs, and then that's going to be what pushes the price of oil up again. I mean, how big were these? For you guys who are young, Ford Excursion size image. How huge was this stupid SUV? I mean, they were just, you couldn't even fit them in a regular parking spot. Yeah, this is a good image of one. You can't even park it in your garage. Right? The thing is taller than your garage door. And I started seeing vehicles that similar enormous size again. Toyota, where is this? It's just a massive thing. It barely fits in. I mean, when the Ford Excursion came out, filling up a gas tank was like $50, and then when the price of oil rose, filling up the gas tank was like $150, and then you started seeing these show up used because people could not afford to drive them anymore, or at least not reasonably. And I'm like, yeah, there's the Ford Excursion next to a more moderately sized SUV, and it's just a beast. I'm not seeing a lot of pictures with a person next to them, but I mean, it's just a massive, massive truck. So anyway, if that's what it takes, if it takes these large SUVs to show up on the road again, then maybe we're 2 or 3 years out, because Trump is relaxing the rules on the fleet emissions standards. China is using less oil with all their EVs, but then the rest of the third world is gobbling up more oil. I don't know. I think it's a 2027 story for oil, but some of the oil services stocks have already started moving in anticipation. So if oil is a 2027 story and the market sniffs that out 6 months in advance, well, we're only 6 months away from being 6 months away from 2027. So, and because copper is already, if I look at, let me look at, so Transocean is up significantly off the lows. Transocean's had a really nice channel, and Profrac hasn't, but Ensign Energy Services, they've been in a nice channel since April. So yeah, the energy services, oil services, are starting to behave reasonably well. So yeah, I think in 6 months, people could sniff out strong oil in 2027 at some point in 2026, if that makes any sense. But I think it's copper's turn right now. Where did I learn all of this? So Robbie Sands says, where did I learn all of this? Where did I learn all of what? Do you recommend any commodities now, maybe positive net income junior miners? Oh yeah, my number one mining company is Taseko Mines. They're building out, it was more fun to buy when it was $3.50 a share, and now it's $5.20. So I was adding a lot down here. They're building out a copper mine in Arizona called the Florence Mine, and it's on time, it's on budget, and they're about to double their production, and it's really not priced in well yet. Although they did just dilute a little to pay down some debt. But yeah, I like Taseko Mines a lot. I think it's going to, in short order. I would be surprised if 2026 goes by and it's not a $7 or $8 stock in 2026. Let's see. Victory Square Technologies, VST, the parent VC company of Hydrate, owns 50%. VST. So VST owns 50% of Hydrate. Vistra Corp. So, the Vistra Corp. Okay. You were telling me about the... Wait. This is the power... Why does a power producing company own so much of a medical company? Victory Square Technologies. Are they... does Victory Square Technologies not listed on a major exchange? Is it private? It's Pink Sheets. So Pink Sheets company owns half of a Canadian listed company. So it's not going to be easy to get data on them. 59 million market cap, and they own half of a much larger company. But what is their debt? I'll write that down. I'll have to look more into it. That might be really inefficient arbitrage. Victory Square Technologies. They allegedly own half of Nurse.v. Interesting. Balance sheet. They do have, it's only short term. Current debt and capital leases, accounts payable. They've got a little mismatch between cash and yeah, so they have a little mishmash between cash and current liabilities to the tune of they got to scrounge up $6 million in pretty short order. Although this is current debt and capital leases. Looks like there's going to be a debt issuance, a refinancing coming up pretty soon here. So that could be why the market doesn't value them as highly as half of the company they own. Let me look at, where is nurse.v? And then I assume they own other stuff too. That's not the only thing they own. Portfolio. Hydrate, VS Digital XR Immersive, Insu Therapeutics, Copilot AI, Cloud Advisors, Ternium Technology Group. Yeah. So, does this market cap, and is it accurate, and does it reflect the whole company, or is there like private LLC units for the much larger company? Because that seems like a large portfolio of businesses for the debt, unless it's severely mispriced or people think they're going out of business. And maybe it's just severely mispriced. Maybe they can raise, they own half of something that's got a market cap of 168 million. Let me see, what's their, does that show up as their float restricted? Shares outstanding, and yeah, so there's the float being less than the shares outstanding. So that matches with the, half of the float off the market. That's interesting. I could dig into that. I'm going to highlight that because that is very interesting. Because I do like Hydrate Technologies very much. All right, and then try CRWS for probably not a value trap. CRWS. Crown Crafts Furnishings. Ooh, okay. I like the bombed out chart. I wish I could use macro trends, but I cannot. Only 10 million shares outstanding. Price to sales is pretty bombed out. It is micro cap. So what does Crown Crafts do? And their trailing 12-month dividend is it's getting a little spastic on me. Very nice, very nice. Let's see. What are you? Oh, it's baby stuff. You might want to own some of this just in case if Taylor Swift and Travis Kelce decide to have a kid, that could spark an enormous baby boom in the country. So they have, now I have a 6-year-old and a 3-year-old, and I'm not familiar with these brands, but we're also not very hip and very fashionable or trendy. I mean, they look totally fine. There's nothing wrong with them, but they're not any brands that I'm familiar with as a consumer. Investor relations, overview, stock data, Crown Crafts. Let me look at their financials. So, earnings per share has been shrinking, but revenue has been very stable. So revenue stable, earnings shrinking. Bedding and diaper versus bibs, toys, and disposable products. Their mix is changing. Their revenue is stable, but their mix is changing, and must be their what is this, quarterly? What are they doing the last quarter? Oh, that's estimates. No, it's not. What is their? Must have some really old data here. 2023. Crown Crafts quarterly income. Let's see. Let me go to annual quickly. Yeah, so sort of flat-ish revenue, maybe declining a little bit, but it's a tough time out there. And then quarterly EBITDA. EBITDA growing. GAAP net income. GAAP net income positive last quarter for the first time. There might be some one-off stuff in there. There might be some one-offs in the old stuff also. What is this? So total revenue, cost of goods sold, gross profit, SG&A. Yeah, it looks like they had a pretty good quarter. This could be this cyclicality. I don't know if the baby stuff has a well, baby stuff does have a seasonality to it, but I don't know if this is just a recovery or seasonality. I could look at that. Now, I like to stay slightly larger in market cap, but so baby stuff, CRWS, baby stuff, probably not a value trap. What's their debt level look like? What's their interest expense? Interest expense, 400,000 a quarter. That's not bad. Balance sheet. Current assets, cash. They're not heavy on cash. They have got decent receivables. Inventory. Long-term debt. It's fluctuating a lot quarter to quarter. Current debt is not terrible. So total liabilities, 39 million. What was their EBITDA again? So quarterly EBITDA, 3.5 million. Let me look at annual. Annual EBITDA, 9 million. It's not horrendously indebted. And I can't drill down here to see how much of that is leasing and how much of it is actually long-term debt, what the coupon is, all that stuff. Yeah, that's very interesting because my readers do like income stocks a lot. That's a small one. I mean, half of me saying, why not just buy more Newell brands? Because they're so bombed out. And they have a lot of baby brands in there, and you're trading at I think a smaller price to sales. And wow, even the dividend's getting high on Newell brands. I mean, it does not deserve to be at $3 a share. There's just something seriously wrong about that price. What are my current thoughts on Transocean? Oh, I love Transocean so much. The stock price has been behaving very well. Last year, not not on the long chart, on the short chart, the stock has been behaving very well. Tommy Deepwater had put all the data together and projected when that they were going to be free cash flow positive, because they have operating cash flow, but it's going towards amortizing debt. But their backlog, their contracts, their fleet status report, everything about the company, and we're getting really close to when they flip over to being free cash flow positive. And even though they haven't announced any new contracts themselves, contract rates have held up. They didn't crash. They aren't growing right now, but they didn't crash. And the world knows that people are waking up to the idea that we're going to need more oil, and that now shale, I don't think shale is rolling over, because shale production has been increasing, and I don't buy into the we've drilled all the best stuff mentality, because they keep on innovating. And the recent innovation is AI and soap. And FTK is a company doing AI and soap, surfactants. But all of their competitors, Baker Hughes and Schlumberger, they all have the same thing, and they all say that it's all about AI and soap. So I don't think shale is rolling over, but offshore can do really well, because offshore is giving heavy sour, and shale is giving light sweet, and you need a blend of both for our refineries, unless we rebuild all our refineries, which doesn't make sense. Better just to drill offshore. I like Transocean. Ford Excursion is similar to gasoline to a F-250. Yeah, well, people are using pickup trucks as a casual get-around town vehicle, and also as just a wealth display, buying a $100,000 pickup truck. So I am seeing a lot of big pickup trucks. I think as gas gets cheaper, you will see people buying these huge pickup trucks just to get around town. Maybe Ford Excursion was from when people had larger family sizes. Now all these people with no kids want to drive around in an F-250 just for fun, have a $100,000 pickup truck just to show off their wealth. Any comment on New Fortress Energy? New Fortress Energy is just waiting for events now. I think they missed an interest payment. They're in some sort of debt restructuring arbitrage in the UK, which is supposedly very shareholder friendly compared to the US. They've been trying to refinance stuff for a while. I think they were waiting for the Puerto Rico contract to be a long-term contract to offset their, to be on the asset side. They could also get paid the FEMA money that they're owed. That seems like it's way past due for getting paid. I think Nicaragua is supposed to be coming online. I saw some rumors that Nicaragua was never coming online. But there's also shorts that are attacking this thing and spreading misinformation. So I don't know if Nicaragua is that's a rumor or not. It's all event driven now. We're all just waiting for news to come out. Are equity holders going to get wiped out in this debt restructuring or not? And that would be, from my understanding of the UK arbitrage process, it is very friendly for the equity holders compared to other processes. So at this point, it's just to trust. Wes Eden is known as a bond maestro. Does he really know what he's doing? Did he set up all of his bonds properly to not lose his whole company? And so it's a gamble. Now, if you don't get wiped out, it's one of those situations where it's a zero or it's $10 plus. So if you find 10 situations like that and you're right half the time, your returns are amazing. But any one situation is pretty intimidating when it's a zero or a $10 plus situation. So it's all information, all events. I think they are in a bit of a dire straits, I think, having missed an interest payment and being in that arbitration in the UK. Let's see. How do you position size and how concentrated do you like to run it? So I don't position size huge. Well, I made mistakes in the past. In the past, I started with position sizes that were too big. With Open Door, I think it started as a 3% position. It ran like $1.25. It was a 3% position, and now it's a 15% position because I only trimmed the tiniest bit, and I don't want to trim because I think the management team is doing incredible things. The story is definitely not over. This is going to be even if this management team fails, we won't know that they failed for a couple of years. And in the meantime, there's going to be so many things happening to the stock price. I wouldn't have felt comfortable buying 15% of my portfolio into Open Door before the management change. I only bought 3% of the portfolio. I think I could have gone up to 5 if I had more time to buy. Now, Abacus Life, I've bought more than that, much more than 3% of my portfolio. And I'm still buying, and I think it might break out of this resistance area. Where am I going to stop buying? I'm going to be adding to Abacus Life every week with money from rolling puts until the price gets away from me. I think my anchoring bias is going to kick in somewhere around like $9 a share. I'm not going to feel good about buying anymore, which is foolish because I think it's on its way to $50 within 5 years. And we'll see with the next earnings call. This is my number one thing I'm pounding the table on right now. I love it so much. So I think I've bought this up to be something like, I could check, but it's something like 10% of my portfolio. But there's so few things I've found that I'm so confident about. Like Babcock and Wilcox had debt problems. Open Door didn't have a good management team. If the company has problems, it's hard to make it more than 1, 2, 3% of your portfolio. Abacus Life doesn't have any problems right now that I can find. Maybe these problems will pop up. Do I know if Transocean is still scrapping old rigs? I'm surprised they did scrap the old rigs, but I think they have 3. The 3 that they have now that are cold stacked are pretty high specification. So it would be shocking if they scrapped those 3. Is the entire offshore service industry scrapping old rigs? Who did? I think... was it, most of the rest of the industry doesn't have any old rigs because when they went through bankruptcy, the judge made them scrap all their old rigs. So the only people that have old rigs now, I think Seadrill might have 3. And I think Valaris scrapped what they have, but most of the cold stacked rigs got scrapped when Valaris and Noble went through their bankruptcy restructuring. So, Transocean, that was one of the things, is they're one of the only companies that had optionality because they had 6 cold stacked rigs. Now they scrapped 3 of them. Now they have 3 cold stacked rigs, but they're high specification. I don't think they'll get stacked. Do I think about probabilities in the bankruptcy plays? I don't have the legal expertise to know how these things are going to go. And also, if you look at what happened with So with Medical Properties Trust, one of their largest tenants went bankrupt. The advisory firm and the lawyers stacked on so many fees to this thing. I think they paid themselves something like $400 million in fees just to the legal firm. So when those vultures get in there, it's very rare for there to be anything left over, just because the lawyers are able to charge, whatever they're going to charge. So if it really went through that sort of restructuring, but the UK process is different. The UK process is much more shareholder friendly, which I have to assume is why Wes Eden structured the bonds that way in the first place, to do that arbitrage in the UK. So he was thinking ahead to some worst case scenarios. He does know stuff about bonds. He's an expert, but I don't know enough about the legal system. I pretty much think that if it's going to go through bankruptcy, the equity holders are going to get wiped out, which they do 90% of the time. Do I think the market prices the odds? In small caps, I don't think the market is efficient at all. I don't think the market knows very much of anything in small caps. What about Valeura? I love Valeura. Valeura is the only oil and gas. Well, I take it back. I'll buy Ecopetrol. Valeura and Ecopetrol are the only two oil and gas drilling companies. I'm really loaded up on oil services, and I have very few extractors. But Valeura and Ecopetrol I would buy. The chart is terrible. I mean, it's totally chopped sideways for a year. But the oil price is down this whole time. But the management team is doing really good. I have a write-up on Valeura. I really like it. I like the management team. It's old. I probably am due a update on Valeura. Well, I'm finally through the chat. Maybe I can look at some of the names on my own list that I was supposed to look at. I was supposed to look at TerraWolf. WULF. So there's two guys with a oh wow, I thought it would have sold off more recently and it didn't. So it's gone from $2 to $15 since the April lows. $6.48 billion company. Let me find out what the heck this thing is. I feel like that I'm probably late to this party is my guess, but I could be wrong. So what do they have? 38 times price to sales. Yeah, I think I'm not going to be able to touch this one. I might do a write-up about it, but there's a concentrated fund run by two people, and they reached out to me because they have two positions, Abacus Life and TerraWolf, and so they wanted to compare notes on Abacus Life because they're a concentrated fund with two positions. Now, they bought TerraWolf down here, so they enjoyed all this upside. I don't know how much upside is left after the triple, but the easy thing must have already happened. So I'd have to dig in pretty deep to see if there's any value left in this thing. It's would not be fun to dig into something like that. Abex. Well, somebody wants me to look at Abex Exchange. Abex Technologies. What is this thing? This one is getting talked about too much on Twitter, so I have a strong suspicion. Oh yeah. So this is another thing. It's already 5x'd. So, and you know what? I don't mind when I miss something, but I'm, how much more, when something has already done the hockey stick graph, how much more hockey sticking does it have left to do? So, okay, so it's an exchange building smarter markets. So a stock exchange or a commodity exchange is a network good. If you win the network, it's fantastic. If you don't win the network, you're out of luck. Price to sales, 3.6 thousand times price to sales is 80 times price to book. Price to book is probably not the best metric for an exchange. Market cap is only 2 billion, which is, if it is a valuable exchange, it's, probably not that expensive, but yeah. That's another one where maybe there's value there. It's just not even fun to dig into anymore. Oh, what is that? VSIAX. A Vanguard Small Cap Value Index. Somebody told me to look at an index fund. Okay, what are the holdings? What are the rules? Energy, MCore, Atmos Energy, Value Index Admiral. Yeah, I don't know why somebody told me to look at an ETF. Let's see. Tao Banker wanted to look at LEGH. What is LEGH? Legacy. Oh, this is an interesting one. This is, let's see. Let's see. So Legacy Housing Corporation, they make double wides. Let me look at their 5-year, 1 year. So that's quite a dip in price. Market cap 475 million. What are they on? Trailing PE, price to sales, price to book, compare their own history. They are a, look at their financials. So they are a manufacturer of manufactured homes, and they did 250 million in revenue in 2022. So it's the interest rate story, right? Rising interest rates crushes them. They probably I don't know if there's a mix match between their fiscal year or people had placed orders previously and then it was delivered later. But you would have thought that that would have been in 2021. They would have had peak revenues. I guess there's probably a lot of advanced ordering. Profitable this whole time. Earnings per share profitable the whole time. Shares outstanding flat to falling. Maybe they did a little bit of share buybacks there. EBITDA 60. Where's the balance sheet? Balance sheet, total liabilities. Oh man, non-current liabilities. That is a zero debt. Zero debt, and just accounts payable really. And then total assets, current assets, non-current assets. A non-current note receivable. I don't know what that is. I'd want to know what that $350 million is. Maybe maybe they do. Maybe they self-finance. I don't know what. I'd have to find out what that is. Current assets, receivables. They have zero cash. This is a no cash business. Inventory, but really got to know what that notes receivable is. But yeah. So the housing problem in the US is that young people can't afford a home. One of the solutions to that is, manufactured housing. Man, my internet connection's awful. This is just not loading today. I don't think they need to fix the website. But yeah, this is an interesting one. Because where's their recent high? $28. I mean, it's at least going to swing back up to because they're doing share buybacks. It's a profitable company. I don't know what kind of growth pathway they have in front of them, but it'll be back at $28 again for a swing trade. I wouldn't be against starting a position in a company like this, profitable all the way, buying back shares. What is going on with this loading? So I can't see the website, but yeah, there are manufactured homes. That one I could write about. I'm going to put this one at the top of my list to write about. That's from Scalpavelli. On Substack, he's called Scalpavelli. On Twitter, he's Tao Banker. Oop. Let me highlight that. MBOT. What is MBOT? Might have to check the chat again. I think people have asked. Microbot Medical. All the healthcare stocks have been just crushed recently, from $4 down to $2, and then bouncing hard right now. Pre-revenue, 162 million market cap, dollar cash per share. What does Microbot Medical do? Breaking news, Emory Hospital. They rang the bell at the NASDAQ. Okay, but what are you? Endoscopy, endovascular robotic system. So they're doing robots that go through your veins, probably for something like heart stents and stuff like that. About Us, Team Liberty. Liberty Endovascular Robotic System. This is robotic vein robots. Oh, look at that little thing. It's a drone you drive through people's veins. That's pretty wild. I don't know how to value it, but it's very interesting and very cool. Let's see. Whoop, there's more things in chat. Do I know any good coal stocks that pay dividends? I do, but they're all limited partnerships. So if you're if you're into limited partnerships, then that's what are the cold stocks that pay dividends. So it's ARLP, American Alliance Resource Partners. What's the forward yield of 9.8%? What's interesting about ARLP is they're taking their cash and they're buying Permian royalties. They're slowly turning themselves from a coal royalty to a Permian royalty. I don't know if they're doing that now that prices are high. Ooh, that's a hammer candle on the 200-day moving average. Holy crap. Look at that. Look at that beautiful thing. That hammer candle resting above the 200-day moving average, that's a breakout. That's a short-term trade alert. I gotta write up a short-term trade alert on that. If you're a swing trader and you see a hammer candle on top of a 200-day moving average, that's a thing of beauty. You have the selling pressure on the MACD diminishing. It's not overbought. It's not oversold, but it's not overbought. Yeah, so Matt Bittner 775. Any good cold stocks that pay dividends? If you don't mind having a limited partnership for the tax consequences, for a swing trade or a long-term hold, Alliance Resource Partners. I got to remember to write about that as a trade alert. ARLP trade alert. Maybe I'll put that out before Monday's open. That is a juicy, juicy, juicy chart. Hachi machi. Yeah, and at least from a swing trade, that should, who knows where it'll stop. You've got a triple top here, so the odds of breaking out of a triple top are pretty good. And you've got a huge resistance range right about 25 bucks. Is that 25 bucks? Yeah, so this is, because it's such a strong dividend payer, it looks like a lot of volatility, but this is between 23 and 26 bucks. This is a very narrow trading range. But it's about to get back up to something above 25. That's not a huge swing trade as far as swing trades go. It is going to get back up to 26, 27. But anyway, that's a nice, maybe I won't do a trade alert on that. But then it's going to be 2 weeks until a golden cross. So you're 2 weeks out from a golden cross and you're got a hammer candle on top of the 200-day moving average. Those are beautiful things. Beautiful, beautiful, beautiful things. Check Nutex Health, NUTX. Nutex Health, it's compressing in a channel. It's less than 1 times price to sales for healthcare. That's interesting. What do they do? The future of healthcare, health management, so hospital management, population health, 24 care facilities. So they're a hospital manager. I think I would rather, let me see the statistics. Would I rather own the hospital manager or would I rather own the hospital landlord? I think if I was going to compare side by side a Nutec versus Medical Properties Trust, Medical Properties Trust just started breaking out. It's beautiful. What is the price to book on this one? 2.5. Medical Properties Trust 0.74. I think I would want to be the hospital's landlord rather than the hospital operator. That's just me. So I'd have a hard time deploying any money to Nutex when I could just buy Medical Properties Trust instead. That's my take on Nutex. LNG future and gold. I think gold might move sideways for a while. And it could even fall because the margins for gold miners are so fat, but at the same time, the gold miners are making such huge fat stacks of cash. The gold miners still have room to rise even if gold stays moving sideways. Monthly volume growing 40% per month. What is that in response to Mr. Flames? What did you talk about previously? I can't see which stock that was in regards to earlier. LNG Future. So LNG Future, they can bring so much online so fast, but then once it's on, it's called the Widowmaker for a reason. It's going to be up and down. Will we see? What are we going to see first? $6 natural gas in the U.S. or $2 natural gas? I think it probably depends how long it takes for the export terminals and the artificial intelligence demand to pick up. But we might have our first cold winter in 3 years because the depressed Atlantic hurricane volume means that we're hitting the North Atlantic oscillator, which usually implies a cold winter. There's no guarantee, but there's good odds of a cold winter. So we might have a lot of natural gas demand. Sleep Number or Purple? I am a Purple guy. I do not like Sleep Number's management, and I do like Purple's management. Now, it's been crushed this whole September, October, November period. I think it'll be back over $1 again soon, and they're rolling out to 45,000 showrooms. I really like Purple. I think I bought early, but I like Purple. IIRC LEGH does provide financing. Okay, yeah, that explains their self-financing, their $350 million asset there. That's interesting. Last looked like 2 years ago, though. One problem with mobile homes is that lots of cities make zoning in a way that makes mobile homes difficult to put in city limits. Yeah, there's a lot of NIMBYism, a lot of not in my backyard. But if you've got Starlink, you've got work from home. I think that young people who get priced out of the housing market, and especially if you look at the number of Gen Z men that want to have a family and want to have kids, I think there's a lot of room for that to be a starter home for a lot of people, a cheap starter home. I think there could be some room there because part of the zero interest rate policy phenomenon was that houses got about 500 square feet too large, so there's no starter homes. And if you don't have to live in the city, if you don't have to commute into downtown for work, why not live out more rurally? And houses are cheap out rurally anyway, but yeah, I don't know. They've been very stable. I might look at LEGH. Poor people will likely have a longer commute due to expensive housing close to job centers. If they have to go into the downtown, which they might not have to do with remote work. Although one nice thing about if you have full self-driving, and who's going to care if they have an hour commute if the car is driving itself and they can be doing stuff on their phone for that time? Would think manufactured homes would be doing better. Just looks as interest rate sensitive as the rest considering sales peak 2022. Yeah, that's what I'm thinking is interest rate beneficiary. Whoop. My little chat window, maybe I can make it bigger. Let's see. I might recommend looking at CODA and or FEIM. Let's see. What was CODA? CODA Octopus Group, Aerospace and Defense. This is not the underwater drones. That's Kraken Robotics. What is CODA Octopus Group? I've seen this image. I must have looked at it once. Sonar Tech. Okay, yeah, I have looked at this. This is the Sonar Tech company. Okay. Now, I don't know enough about their technology to know how critical they are. So when you're confronted with the unknown, you have to kind of either just punt and do a small position or do a basket approach. I don't know how unique they are. Yeah, I just am so far out of my circle of competence here. I can try and maybe ask artificial intelligence and hope it doesn't hallucinate how unique they are with their patents and how susceptible they are to competition. But I would really be punting on this one. But I could watch management and see how if management's delivering and see the trajectory in their trends. What is their sales? I'd have to look at the sales growth to know if it's overpriced or not. CODA and FEIM. I feel like I've looked at FEIM once before. Frequency Electronics. So that's similar maybe. some of these defense contractors are running into pressure. Let's see. Second quantum leasing. Is it? Okay. High precision timing and frequency control products for, yeah, that's going to be pretty tough for my circle of competence. How do I feel about LifeMD's growth rate? I really like LifeMD. They had a hiccup, which was people downloading the app. People downloading the app didn't know if their products were going to be covered by their insurance or not. And so now they're working out. This is a fantastic growth rate. Look at their revenue growth. Yeah, I really like LifeMD's growth rate. And now they're debt-free because they sold their SaaS business. But they sold their SaaS, I think they sold it for too little, but they sold it to a related party. So they let the person they acquired buy themselves back out, which was very friendly of them. And now they're debt-free. But yeah, I like their growth rate. So the LifeMD story, they are like a HIMSS competitor, but they partnered with Medifast. And Medifast has all these gig economy workers, all these yoga instructors and all these fitness coaches that are selling Medifast. And what they're doing is, so your yoga instructor that is a Medifast gig economy worker can be your fitness coach, and you can pay Medifast, get LifeMD along with that bonus, and LifeMD will give you a pharmacist to prescribe you GLP-1 inhibitors, and then hopefully your insurance can pay for it. But when people download the app, they can't know immediately if their insurance is going to pay for it or not. They said they were going to solve that problem this year. And because their number of downloads tripled, but their number of new customers didn't. So people download it to get the GLP-1 and they don't know if insurance is going to cover it. As that problem gets taken care of, I think their growth is going to accelerate because the Medifast partnership is just going to pump them full of volumes. I really like LifeMD. Sorry, Abax has LNG futures and gold futures. Okay, Flames. Thank you. Contract futures vol growing at, okay. So yeah, there's Abax, it might have a lot of room to go. The chart tells me that I missed it, and that's okay. I miss things. I found Finance of America before it went. That's the world I like to be in. So if I look at Finance of America, a lot of times a chart that does the hockey stick, like Finance of America did, right? It does the hockey stick, and then it spends some time consolidating. So if I look at the graph of Abax or some of these other ones that they've already done the hockey stick, I'm going to be buying in right before the consolidation period. Maybe, yeah, there's plenty of things out there to find to not have to chase when things have already done a 5x for somebody else. That's just my take on it. Maybe if I dug in, it really has a lot of room to go. Let's see, silver is coming, the exchanges in Singapore. How will interest rate drops affect FOA's existing book? So FOA's existing book, it's less about the interest rate level and more about the yield curve. They were a big beneficiary of the yield curve being inverted. A steeper yield, a regular uninverted steep yield curve is going to hurt them, but not that much because they issue these mortgage-backed securities. It's 5 years callable after 3. So if the interest rates move against them, they can call their outstanding things and reissue them. And if you reissue something at a low interest rate, you reissue it at a higher price. So when the yield curve is in their favor, it runs the full 5 years. When it's not in their favor, they call it and they reissue it. And if they call it and reissue it and get all this stuff at low interest rates, then there's a chance that it's going to be in their favor again very shortly on the next rate increase. So their real protection is that their mortgage-backed securities are callable after 3 years. That's their protection. It's not perfect. I mean, they're obviously not going to make as much money as when the yield curve is inverted, but they're in a pretty safe position. Nutex is extremely cheap. They get 40% of hospital profits have surged due to out-of-network regulation. I feel like, so Jack Boy talking about hospital profit, I feel like the Eye of Sauron is going to be looking at healthcare after the midterm elections. That you can't have the U.S. spending 13% of GDP on health insurance in hospitals. There's going to be some there's going to be some regulatory change, and I don't want to be too heavily involved in the hospital world. And I really like medical property trust. I think being the hospital's landlord is the much better way to be. When you sell a contract, you get your money intraday and not T+2. Yeah, I mean, look, I'm sure it's a huge innovation for Abax Exchange. I just think I missed it, and I know Murray Stahl has some exchanges that still haven't. So within Horizon Kinetics, I think he's got some Miami exchange that still hasn't. The price hasn't inflected yet. So it's just not for me. I don't have to chase something that's gone that ballistic. I'd and they also might not win the war. There might be some other network that comes along and displaces them. So I don't feel like I have to chase. If I really, so Harris Kupperman is big into buying exchanges. He's buying I think Bovespa in Brazil. I'm not even that crazy about it. Bovespa. What's the Brazilian exchange? Brazil Stock Market Exchange. Bovespa. What is this thing? What is this ticker? Brazil IBOV. IBOV. BVSP, Bovespa Index Fund. No, what I want is the stock market itself. Stock exchange. Let's see. Brazil stock market, Bovespa quote, B3. What is your ticker? B3SA3, B3. So what is B3? I probably should have put this on my short list to look at anyway. Just have to find the ticker of B3. What the heck is this thing called? B3 stock, B3SA3. B3S. Some of the South American stuff is just really hard to find the ticker symbol on. B3SA. B3SA. Go to the 1 year. 5 years. Yeah, so this almost has the same chart as PagSeguro. B3SA3, B3SA. Why can I not find you on Yahoo Finance? B3SA. No, B3SA3. B3SA3, there we go. Can I finally find this? So yeah, if you really like exchanges, some people are really big into exchanges, and fair enough. 77 billion Brazilian real market cap. What are statistics? PE ratio 16. Let's see. Price to sales 8, price to book 4. It's not cheap by my, it's not cheap for me. I really like PagSeguro here. And that's one of those situations where they're growing, it just doesn't look like growth. Oh wow, it broke above 10 again. Go back to this one. For me, PagSeguro has a much clearer path to get back to $50 a share, because it's trading at 1 times price to sales for a payment processor, as opposed to B3, which is trading at 8 times price to sales. I think PagSeguro can get to 5 times price to sales. Now, both can have volume. So the theory for Brazil is that when Lula's out of power, the economy is going to boom and volume is going to pick up. So anything that handles volume, you just want to handle that volume and keep on making all that money on volume. And I like PagSeguro better. But I mean, Stone isn't bad. I just don't like having PagSeguro's advantage over. StoneCo has a bit of a dip. They are not at all-time highs, or not at recent near-term highs. Why did Stone? Well, it's the same thing. Like, it's gonna get back to. It's a 5x from here to get back to previous pre-Lula prices. I don't know why they had this recent dip though. What is going? Their price to sales are already at 6 though. Yeah, Stone, and then there's a New Bank. If I was a growth investor, though, New Holdings, it's just sometimes you want to invest in smart people, and they have the smartest advertising campaign I have ever seen. They gave people a free raffle ticket if they got somebody to open an account with them. And the raffle ticket was for FIFA in World Cup in Dubai. So pretty much they got half of Brazil to create a bank account with them just to get just for the cost of one all expenses paid vacation to go see FIFA in Dubai. So they had, most banks' customer acquisition cost is like $50 a customer. Their customer acquisition cost was averaging like $5 a customer. And when you see somebody do something that genius, you just figure, okay, well, what's the next genius thing they're going to do? So Nubank is a pretty amazing growth company. Their price to sales is less than the B3 stock exchange in Brazil. But for me, rather than ABAXX, so I think PagSeguro is going to do a 5x for me before ABAXX, which has already done a 5x, is going to do another 5x. That's just my take on it. I mean, the market cap is $3.5 billion, but they're already it's already at 1 times price to sales. Anyway, I'm pretty big on this one. All right, I cleaned out the chat so I can look at another company from my own list. Miracle. Let's see. KFS. What is KFS? Kingsway Financial Services. Auto truck dealership. It's trading at 3 times price to sales. It had this huge hockey stick up. What is it you guys do, Kingsway Financial Services? Building through search. What does that mean? Publicly traded U.S. company employing the search fund model. So they're a public private equity roll-up. B2B and B2C services companies. So they want capital light businesses. So they're a private equity roll-up of capital light businesses. And they have 2 companies. They only have 2 companies. It's not very far along in their roll-up. What the heck is... Let's see. Singular Search Accelerator. So they're incubating their own companies they want to buy. And then what is this? Extended warranty. Automotive and HVAC markets. Oh my God. Have you guys seen the data on what percentage of private equity roll-ups is HVAC technician companies? It's like 10% of all private equity is HVAC businesses. Let's see. Prime Trinity Warranty, Car Warranty, IWS Acquisition Corporation, Vehicle Service Agreements, Asset Gap Programs, Gap Insurance, Preferred Warranties, Extended Warranty Plans, Gemnius Vehicle Service Agreements for used car buyers, Penn Warranty Vehicle. So this is a bunch of extended warranty sales companies for used cars. And then Trinity sells warranty products, maintenance support for HVAC, standby generators, commercial lighting, refrigeration industries. This is interesting. I think the reason why this was on my thing listed as Silver Tsunamis, the idea is the owners of these HVAC businesses, they're all in their 80s. And the funny thing is people were predicting these business owners would sell their businesses when they turn 65. And now they're 80 years old and they still own their businesses. But at some point they have to sell because they pass away or something happens. So that's their extended warranty segment. And then that's their accelerator company. Our companies. B2B services, accounting and HR, consulting to venture businesses. So this is venture servicing venture. executive services firm, financial management leadership, and then image solutions, IT service providers in Western North Carolina. One of the largest IT service providers in Western North Carolina. That's it's a, quite a very limited claim to fame. Employs 35 people. Healthcare services, secure nursing, per diem travel registered nurses, digital diagnostics, outsourced cardiac monitoring telemetry, software, system product international viewpoint. So yeah, this is skilled trades, Bud's Plumbing, AAA Advanced Plumbing, Southside Plumbing. This really is a public private equity firm doing a plumbing roll up. It's kind of amazing to find. I feel like I want to just write about this just for fun. Let's see. May 18, 2025 investor presentation. This Kingsway Financial, it just might be fun to read about. It just seems like fun it's a public private equity firm. My Kingsway Financial Investor Day. Man, my internet is just not cooperating today. I had to just wag my finger at Spectrum. Let's see. Introduction to Kingsway, business update. Historical return across all search funds since 1984. Yeah, but that's before they got crowded. So I mean, before the whole world became a private equity fund, the average rate of return was 35% a year. But what year was that study? Let's see. Stanford's research can be found there. So yeah, I feel like that return is going to go down when it gets crowded out and they have to pay more for deals. It's explaining what they do. The silver tsunami of business owner retirements has arrived. People predicted that 15 years ago, and they just held on to their businesses an extra 15 years. Search is difficult to access. Yeah. Top quality searcher talent. Had 100 applicants for 2 open positions. Yeah, but that's what the job market is like now. Those are their current portfolio operators. Let's see. Advisory board. Tax advantaged. This is how much money we lost in the past. We have 622 million of net operating loss tax assets. Oh god, this is just too perfect. Too perfect. The public private equity firm with net operating losses to show how valuable they are because of how much money they lost in the past. Oh, this is too funny. It's too funny to not write about this. I'm dying. Okay, and let's see. Home warranty business. Let's see, what do they have? 2 to 3 acquisitions a year, 30% internal rate of return hurdle. So everything they buy, they think they're going to get at least 30% on, including Bud's Plumbing. Just how much is Bud's Plumbing worth without Bud talking to the customers? I'm very suspicious. So Ravix Group was $11 million for 5.8 times EBITDA. C-Suite FP, 8.5 million for 1.8 for 4.7 times EBITDA. So and then the recent deals are all 6 times EBITDA. Bud's Plumbing, 6 times EBITDA for Bud's Plumbing. Alta Equipment Group pays 3 to 4 times EBITDA, and they buy franchises that have regional monopoly exclusivity. So Alta Equipment Group is the better private equity roll-up, in my opinion. Case study SPI 1.3 times recurring revenue. Today it's a rule of 40 SaaS business. I mean, yeah, if you know software, you can do really well. Let's see. M&A, so they're doing 2 to 3 deals a year. I think I'm going to have to write about this one just because it's so fun. But I think I'm going to pass on it. I think I'll buy more Alta Equipment Group. Just looking at this makes me want to buy Alta Equipment Group even more. What is the better silver tsunami stock? Kingsway Financial or was it Norwegian Cruise Lines, NCL? No, Norwegian Cruise Lines, NCLH. Their stock price is down a little from the recent peak also. And 0.8 times price to sales. It's not too bad. Its forward PE is not too bad either. Their trailing net income, yeah. Norwegian Cruise Lines might be not a bad silver tsunami stock. I might have to do another silver tsunami update. NCLH, Norwegian Cruise Lines. How are their competitors? Carnival, no. Royal Caribbean. I wouldn't do Carnival, but I would do Royal Caribbean, Lindblad Expeditions, Marcus, Walt Disney, Expedia, Hilton. So Norwegian's 0.87 price to sales. Royal Caribbean is 4 times price to sales. What is this going on? Forward P of 14. If Royal Caribbean can do that, then Norwegian is even better to write about. I'd have to check out their debt burden. Well, Bud's Plumbing has very powerful culture, so every customer gets the Bud experience even without Bud present. I'm glad you have the same sense of humor that I do, Stockaholics. I mean, yeah, these private equity companies buying plumbing businesses, so much of that business is the founder talking to customers. I don't see what the heck they're buying afterwards. I mean, yeah, private equity is going to do I mean, they're just making their assets under management fees. They're raising money and doing things that are probably destroying it. But anyway, well, I don't know how long I've been streaming for, but it's probably time to go. But I have some ideas for things that I want to write about next week. So I think it was a useful and fruitful live stream. But thank you guys very much for coming and listening, and I hope you have a great week.